This is the Equity Management Academy Weekend Podcast for September 12, 2021. Inflation. It's not going away. It is not temporary. Summary. The U.S. Producer Price Index came out today, increasing more than expected. Materials shortages, shipping bottlenecks, and increasing labor costs have increased producer prices, further stoking consumer inflation. It is a challenge to dissect and analyze what's going on. Looking for a helping hand in the market? Members of Mean Reversion Trading get exclusive ideas and guidance to navigate any climate. Fundamentals. The U.S. Producer Price Index came out recently, increasing more than expected. The PPI increased in August 0.7% from the prior month and 8.3% from a year ago. Materials shortages, shipping bottlenecks, and increasing labor costs have increased producer prices, further stoking consumer inflation. With such news, it's puzzling that silver and gold are down. We are looking at a higher level of inflation expected. It's not going away. It's not temporary. We have wage price inflation. We have monetary inflation caused by the flood of stimulus from the government, which is weakening the U.S. dollar, decreasing its purchasing power. We have price inflation due to the supply bottlenecks. We are also seeing wage inflation as companies must pay more to hire and retain workers. We are probably going to see even more inflation on all fronts. It's a challenge to dissect and analyze what's going on. China puts out so much propaganda. Other governments are far from reliable sources of information. News that should cause precious metals to rise do not. Therefore, we rely on technical analysis to show us where to trade the markets. Gold. Gold is down about $3 to $17.96. Silver is around $24.17, unchanged. The markets have been choppy. Gold appears to have settled into a major area of support. The Variable Changing Price Momentum Indicator, VCPMI, provides daily and weekly signals which we compare. The daily VCPMI average is 1795 for gold. The market came down to the weekly mean of 1790 and then reverted from there, but could not hit 1805. It then went back down to an extreme below the mean, 1787, which is an area of support. On a weekly basis, gold is extremely oversold. It also tested the daily level of support, activating a weekly buy trigger at 1790 on September 9. We seek the highest probability day or swing trades. We use the VCPMI to identify the highest probability trades by identifying the market when the market is at the extreme above or below the mean, daily, weekly, and monthly. Around the mean, the market has a 50-50 chance of going up or down. At an extreme above or below the mean, the VCPMI identifies where the market is 90 and 95% likely to revert back to the mean. Those levels indicate the highest probability trades. The daily VCPMI average price of gold is $17.95. Gold trading above that price has activated a bullish price momentum. Since gold is trading around the average price, you should not trade there. Wait for the extremes. For day trading, there are no day trading signals for gold. We are bullish the market long term. We are waiting to see if gold goes up to 1805, where we will take profits. We want to see the market back at the yearly average price of 1810. If we close above, it will activate the annual target of 2150. The 360-day cyclical bottom is upon us. As we take a look at the 360-day cyclical pattern from October 4th, 2020, report published on Seeking Alpha, it appears that the cyclical bottom came in about 12 days earlier. The market came down to the annual, a simple moving average of 1771 and reverted to close above the annual mean of 1810. It is still within a range to complete the annual pattern a week earlier or a week later. The initial confirmation that this bottom is in place is a rally from the current levels of about $30 to $40 initially, or a close above 1810, activating the annual targets of 2164 to 2442. A test of the resistance at these levels into September 14th, 15th of this month, and subsequently a test of the current lows into the 28th of this month would be a perfect picture for the next 2021 annual bottom pattern to be completed for our next calendar year beginning September 28, 2021 to September 28, 2022.
Thank you for listening. If you want to learn more about what we do, please go to the Equity Management Academy, ema2trade.com, or listen to any of our previous episodes.
Are you looking for an automated artificial intelligence trading system? Do you want to analyze commodities and financial markets to determine when to buy and sell? Looking for an indicator to predict future trends in the commodities and financial markets? Welcome to EMA2 Trade Live Signals. Our Variable Changing Price Momentum Indicator, VCPMI, is an automated AI trading system developed and tested over a decade. The VCPMI algorithm is based on age-old vortex mathematics combined with Fibonacci wave theory, trend analysis, pivot points, and several other widely accepted financial analytical methods. The VCPMI can help you take emotions out of your trading and rely on simple mathematics to predict future trends in financial markets. This approach will make your trading more effective, consistent, and profitable. VCPMI algorithm. The VCPMI code points and levels are support and resistance levels and behave exactly like any historical supply and demand level. Therefore, the VCPMI code levels are useful as an index tool for both day trading and for selecting and exercising entries and exits for longer-term traders. Why VCPMI? The VCPMI relies on artificial intelligence to analyze markets and predicts future movements, which seek to determine what a security or commodity is worth at a given point in time. The VCPMI uses technical analysis in the form of mean reversion trading, which seeks to capitalize on extreme changes in the pricing of a particular market based on the assumption that it will revert to its previous state. The VCPMI can be applied to both buying and selling, as it allows a trader to profit on unexpected upswings and save when security or commodity is trading at an abnormal level. Visit ema2trade.com for more details.